Long before modern stock exchanges, before digital banking apps, before global hedge funds and investment platforms, the foundations of financial trust were being built in places most investors rarely study today. And the deeper you go into history, the clearer one truth becomes: finance has never been just about money. It has always been about systems, trust, and rules that allow value to move across distance and time. Welcome to YieldVerse, where finance, history, and strategy intersect, and where the past quietly explains the future. This is the story of how early global trade networks transformed the concept of money, and how those ideas still shape modern investing, banking, and economic power. Because finance did not suddenly appear in modern New York or London. It evolved through centuries of experimentation, adaptation, and innovation across civilizations. To understand this evolution, you have to travel back to a time when trade routes stretched farther than empires. Between the 9th and 13th centuries, merchants were already operating across continents. Goods moved from East Asia to the Middle East, from North Africa to Europe, and from the Indian Ocean to the Mediterranean. Silk, spices, paper, metals, and textiles flowed across vast distances. But moving goods was only half the challenge. Moving money safely was the real problem. Carrying gold across deserts or seas was dangerous. Bandits, storms, and political instability could wipe out years of profit in a single moment. Merchants needed something more reliable than heavy coins. They needed a system of financial trust. And so financial innovation emerged naturally from necessity. Traders began using written agreements that allowed them to deposit money in one city and withdraw it in another. These documents were not just paper, they were promises backed by reputation and legal enforcement. A merchant could travel with a written instrument instead of bags of gold. The value moved, even if the metal did not. This dramatically reduced risk. Trade accelerated. Markets expanded. Trust became the new currency. But financial instruments alone were not enough. They needed legal systems that could enforce agreements across regions. Courts, contracts, and standardized commercial rules became the invisible infrastructure of trade. When merchants knew their agreements would be honored, they were willing to take bigger risks and invest in larger ventures. And when investment increases, economies grow. One of the most important developments during this period was structured partnership finance. Instead of one wealthy individual funding everything, multiple investors could pool capital and share profits. Risk was distributed. Opportunity expanded. Entrepreneurs gained access to funding. Investors gained access to new markets. This model laid the groundwork for modern venture capital and investment funds. The principle was simple. Capital and labor work together. Profit is shared. Risk is distributed. It sounds familiar because it still defines modern finance. At YieldVerse, this is one of the core insights. Financial innovation is rarely about creating something completely new. It is about refining systems that already exist. As trade networks grew, financial systems became more complex. Credit arrangements appeared. Commercial insurance emerged. Partnership contracts became more detailed. Finance was evolving into an organized structure rather than a collection of isolated transactions. And wherever organized finance exists, economic power follows. Cities that controlled trade routes became wealthy. Regions with stable legal systems attracted merchants. Governments that protected commerce gained influence. Money began shaping geopolitics. But history also teaches a difficult lesson. Financial systems are fragile. They depend on stability, trust, and institutional strength. When political structures collapse, financial networks collapse with them. Trade slows. Credit disappears. Wealth evaporates. This pattern has repeated throughout history. Empires rise on trade and finance. Empires fall when trust and institutions weaken. At YieldVerse, this historical perspective matters because modern finance operates on the same principles. Today, value moves digitally instead of physically. Banks replace caravans. Servers replace ledgers. But the underlying structure is unchanged. Trust enables transactions. Law enforces contracts. Institutions stabilize markets. Remove any of these elements, and the system begins to crack. Modern investors often focus on stock prices, interest rates, and inflation numbers. But these are surface indicators. Underneath them lies architecture. How is money created? How is risk distributed? How are contracts enforced? How stable are institutions? These questions determine long-term financial strength. The global financial crisis of 2008 showed what happens when trust weakens. Credit expanded too aggressively. Risk became hidden in complex financial instruments. Institutions struggled to maintain stability. When confidence disappeared, markets collapsed. The lesson was not new. History had already shown it many times. Financial systems fail when structure becomes disconnected from reality. That is why studying economic history is not just academic. It is strategic. At YieldVerse, the goal is to connect historical insight with modern financial understanding. Because the rules governing money today were shaped by centuries of experimentation. Trade networks taught us how to move value safely. Partnership structures taught us how to share risk. Legal systems taught us how to enforce trust. And institutions taught us how to sustain growth. The future of finance will not come from nowhere. It will emerge from the same principles that shaped the past. Digital currencies, decentralized finance, and new investment platforms are simply the next stage of evolution. The architecture is changing, but the core questions remain the same. Who controls value? Who bears risk? Who enforces trust? History provides the answers. And those who understand financial architecture gain a powerful advantage. Because money follows structure, power follows money, and structure follows trust. This is the philosophy behind YieldVerse. If you understand how finance evolved, you can better understand where it is going. And when you understand where it is going, you can position yourself ahead of the curve. History does not predict the future, but it reveals the patterns. And in finance, patterns are everything. If this perspective changed the way you see money and markets, subscribe to YieldVerse. Because the most powerful financial strategies are often hidden in the past, waiting to be rediscovered.